Did you know that in 2024, you could reduce your tax bill by $2,000 per child? Or that families earning up to $400,000 might qualify? In the next few minutes, we'll break down the child tax credit, expose common mistakes, and show you how to claim what's rightfully yours. Let's be clear, if you're not claiming the child tax credit, you're potentially leaving thousands of dollars on the table. Think about it. That's money that could be in your pocket, paying for your kids' needs or boosting your savings. Sound familiar? It's time to fix that. Here's where it gets interesting. We're about to uncover the misconceptions holding you back and show you how to turn your tax season from a nightmare into a financial boost. Ready to stop dreading April 15th and start seeing it as payday? Let's get started. Now, you might be thinking, I make too much money to qualify for any tax credits. Hold that thought. The child tax credit has some surprising eligibility rules that could put thousands of dollars back in your pocket, even if you're comfortably middle class. Let's bust some myths wide open. The child tax credit isn't just for families struggling to make ends meet. In fact, married couples filing jointly can earn up to $400,000 and still qualify. That's right, $400,000. Not exactly chump change, is it? But income isn't the only factor at play here. There are 7 key criteria you need to meet: age, relationship, dependent status, residency, financial support, citizenship, and income. Let's break it down. Your child needs to be under 17, a qualifying relative, and you must provide over half of their support. They also need to live with you for more than half the year and be a U.S. citizen, national, or resident alien. Now, here's where it gets really interesting. Even if you don't owe taxes, you might still get money back through the additional child tax credit. We're talking up to $1,700 per child in 2024. That's money that could be going towards your kids' education, family vacations, or just easing the pressure on your monthly budget. But wait, there's more. The child tax credit starts to phase out at $200,000 for single filers and $400,000 for married couples filing jointly. After that, it reduces by $50 for every $1,000 you earn above these thresholds. So even if you're in a higher income bracket, you might still qualify for a partial credit. Here's something that might surprise you. Families who don't typically file taxes may still be eligible. If you earn at least $2,500, the credit starts to phase in at a rate of 15% for every dollar earned over that amount. This means the child tax credit is more accessible than many people realize. Let's put this into perspective. The child tax credit supports approximately 40 million families in the U.S. each year. That's not just a handful of low-income households. It's a significant portion of American families across various income levels. With so many families relying on this credit, you'd think claiming it would be foolproof. Think again. Ever wondered why some people end up owing the IRS instead of getting a refund? It often comes down to one simple error on their tax form. Let's uncover the costly pitfalls you need to avoid. When it comes to the child tax credit, even small mistakes can lead to big consequences. Imagine filing your taxes, thinking you're in for a nice refund, only to get a letter from the IRS demanding repayment. Sound familiar? It's a scenario that's all too real for many taxpayers who make errors when claiming this credit. So, what are these costly mistakes? Let's break it down. One of the most common errors is incorrect Social Security numbers. It seems simple, but mixing up a digit can throw your entire claim into question. Another frequent slip-up is misreporting income. Remember those thresholds we talked about earlier? If you're not accurate about your earnings, you could end up claiming a credit you're not eligible for. But it doesn't stop there. Failing to meet the residency requirement or not providing over half of the child's support are other oversights that can land you in hot water. These might seem like minor details, but to the IRS, they're make or break factors in determining your eligibility. Now, here's where it gets serious. If the IRS denies your child tax credit claim, you're not just missing out on that extra cash. You could be forced to pay back any amount you've already received, plus interest. And if that's not bad enough, there's a potential penalty of up to 20% of the claimed amount. That $2,000 credit could quickly turn into a significant debt. But don't panic just yet. There are ways to protect yourself. First and foremost, double-check all information on your tax return. It's tedious, sure, but it's a lot less painful than dealing with the IRS later. Make sure you understand the qualification criteria inside and out. If you're unsure about anything, don't guess. Seek professional help or use reliable IRS resources. Remember, the child tax credit isn't just about getting a bigger refund. It's about financial stability for your family. By avoiding these pitfalls, you're not just saving yourself from headaches, you're potentially putting an extra $2,000 per child in your pocket. Think about what that could mean for your family's future. Let's recap. The child tax credit isn't just for low earners. It's worth up to $2,000 per child. And yes, you might qualify even if you think you don't. Remember those 7 criteria? Age, relationship, dependent status, residency, financial support, citizenship, and income. If you're meeting these, you could be leaving serious money on the table. Your next step? Take a close look at your tax situation. Are you earning between $2,500 and $400,000 as a married couple? You might be in the sweet spot. Don't forget to fill out Schedule 8812 along with your Form 1040. It's not just paperwork, it's your ticket to potentially thousands in tax savings. Remember, understanding your taxes isn't just about avoiding problems, it's about claiming what's rightfully yours. You've got this. Don't let confusion or misconceptions stop you from getting the credit you deserve. It's time to turn tax season into your financial advantage.